please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters, the show we're going to highlight all the buzzing stocks of the day. Well, we had a good Monday, but Tuesday, unfortunately, we started off in the positive terrain. From there, we have come off sharply from the high point of the day. Hey, Mangalam, it's looking a little tricky. We thought we had, we hit a double century in the last couple of days. But today, I was just taking a look at it. And the 50-day DMA, that's a bit worrying. We went to around the 10,680 odd mark. And from there, we did see some selling. I'm going to keep an eye out on that mark because on the upside, that's pretty clear. If we can get out of that 10,620, then we could be bracing ourselves for a bit of short covering. But on the downside as well, 10,450 odd should hold out. We have a couple of important levels over there. The 100 DMA, for example, comes in at around 10,425, and no one's really talking about lower levels because the 10,300 odd level should be respected in the near term. But otherwise, 200 DMA at around 10,104. Today, in fact, I think it'll be important to see whether or not we can hold on and maybe even end at the flattish line. The bulls will take that.
Absolutely, the bulls will take that. You spoke about the 50-day moving average, not to forget the lower, the less time 20-day moving average as well. We've been consolidating between those two levels. So the 20-day and the 50-day moving average, both of them are at the same level, 10,615 and 10,618. That is something we'll be watching out for. There is a nice fight going on between the bulls and the bears at the 10,600 level. That is something that I was watching out for. The 10,600 options, both the call and the put. The put has added about 3.5 lakh shares. Maybe bears believe that that is a mark that needs to be taken out, but the bulls believe no, we will go ahead and defend this one, while the bulls on the other hand believe that maybe we will go ahead and cross the 10,600 mark. So that's why there is some action on the 10,600 put. 10,600 call too, as we speak, is seeing a bit of writing pressure out there. But what is really hurting our markets right now is the mid-cap index as well as the Nifty Bank, down about 250 points for the Nifty Bank. The mid-caps too down about by a century. So that is something we'll be watching out for. Let's take this point forward with Ashwani himself. Ashwani, 20-day as well as the 50-day moving average, do you see a probability of that being breached in today's trading session, or maybe we've hit that hurdle once and we might not go there again?
See, what I wanted to see was how badly the bear could beat us. He's been able to take the Nifty down 19 points. Bank Nifty 230 points after a 800-900 point rally. So, bears are not looking strong. So while we are, kind of subdued early morning, I think this is the time, if you missed out, get into Nifty calls, buy the Bank Nifty, buy the Nifty, because the bears side, according to me, is weak. And the moment they throw in the towel, I think bulls will rampage forward, and the shorts which have come in today, as well as those longer term shorts at 10,630, 650, they will also get rogered. So the market is not looking that weak. Yes, you are pulling back from averages, but if that pullback is not strong, this pullback will get bought, and you will finally move even further on the upside.
Okay, all right, Ashwani, if you're going to go ahead and buy the Nifty, where should your stop loss come in at?
See, stop loss you can easily have because you are buying here a 100-point stop on the Nifty, maybe 150, 200 on the Bank Nifty should be fine, but you won't need that sort of a stop because the market has dipped, and chances are from here we should recover. But still, if you are initiating a fresh position, that should be your stop. And this is a fairly welcome dip because another day of upside would have overextended the market a little bit, and people won't have really participated. I think this is the opportunity you are getting to participate. Maybe the shorts are getting an opportunity to cover and save their skin.
Okay.
If other shorts continue to remain in, they are likely to get butchered because there is no macro trigger globally or locally which should take us down further. So that way, for the moment, today is a day when IT is outperforming. So NIT Tech is a buy with a stop of 840, target of 865. IGL is a buy with a stop of 302, target of 318. And Canara Bank remains a sell with a stop of 309, target of 294.
Actually, a stock which just swam onto my radar was REC. It's had a decent start to the week so far, up about 5%. Was up yesterday too. Its other counterpart, PFC, had some fundamental news. Both these stocks we've seen, they move in pairs. REC is closer to the high point of today's trading session. Any trade there?
It's up 0.7. See, PSU financials are going to underperform. So the advice is, if you can get into a private financial, which are also lower today, I think that's a much better trade. REC is below its 200 and fairly weak stock.
Okay, all right. Thanks so much for that.
It's that time of the morning, our daily consumption of milk. We get Parag Milk. That's the stock on our radar. Dairy stocks have been buzzing for a while. Parag Milk itself is up about 30% in the last 12 months. We have Devendra Shah, the chairman of the company. Remember, there are a few triggers for the dairy industry itself. First up, the shift from unorganized space, higher value-added products, and increase in distribution too. So thanks a lot, Mr. Shah, for joining in. Third quarter results were very good. Your gross margins increased. The one thing that really stood out, and that was told to us by the management of Amul as well, was the lower milk prices. So if you could tell us, how much are you procuring milk at right now? Earlier it was 26, 27. The management of Amul told us it fell as low as 18 in January. So what is the procurement price per litre?
Procurement prices come down compared to the last year by 7-8%, but we are not focusing or increasing our volume because of the decreasing of the milk price. We take the very high growth basically in the value-added product in the consumer segment. That's why this quarter we done the good numbers. Absolutely 7-8% milk price is coming down. And we pass it to the consumer, this all.
Tell us, sir,
prices.
So if you could tell us, your gross margins, they were at around 20%. They increased to 31% in the third quarter. If you could tell us how much of that increase was on account of higher value-added products and how much of that was on account of lower milk procurement prices?
65% we take for the value-added product. We convert our milk in 65% in the value-added product.
So your gross margins are likely to remain around that 30% mark?
We marginally convert from the 32% mark.
All right, Mr. Shah, if you could help us out, sir, with what was the price? You have told us that it was, the milk procurement prices are down by around 7 to 8%. But if you could give us the absolute number, sir, we believe that last year it was at around 26, 27 rupees. Then it came down to around 18, 19 rupees. As of now, sir, what is the milk procurement price?
No. As of now, is the 23 rupees, 50 paisa around that is milk price.
All right, Mr. Shah, also we wanted to focus on your longer term guidance that you had.
And it's a flat again in the current.
Okay.
Fine. Okay, so that's about the milk procurement price, sir. We get that point. If you could take us through, sir, your long-term objective is to do a revenue of around 2,500 crores in the next couple of years and around 150 crores in terms of profitability. That means you'll have to grow at around 13 to around 15% for the next couple of years. Possible? Do you think that's on the cards? And also if you could guide us in terms of margins?
We are giving the same guidance. Even last quarter we are giving the guidance for the 13-14%, but we are doing better than the 14%.
Oh.
Around 16% we take the growth in the last quarter.
So,
yeah.
Last quarter margins, can they hit 10% plus?
Yeah, it's a 10 plus is the margin.
Wonderful, sir. So, if you could give
11%
us
11% around.
Okay, 11%, around 11% is what you're saying. All right. So let's get talking about your individual products. You have had a huge launch of new products. You've started out with whey protein. You've started out with mango-based drink Slurp. You've also launched ghee, curd right now. What kind of contribution do you see coming to your revenue from these products?
We are launching the Avatar is the first protein, sports nutrition protein in the country. And this is a well accepted by consumer. Yeah, we distribute this product online, basically with all online partners, Amazon, Flipkart, and from our channel, from the e-commerce all. And we distribute this all with our sports nutrition shop also. And earlier we start from the west, now it's available, then south, and now it's available in the north also.
Okay.
Again, we are focusing curd. We are doing well in the south and west. Recently, we launched this curd into the north. In the north market, the first cow-based curd is well accepted by consumers in Delhi, basically in Delhi and NCR.
Okay.
All right, sir. Thanks a lot for joining in and giving us all those details. The street likes the fact that you have maintained your long-term guidance of 2,500 crore revenue in FY20 with 150 crores in terms of EBITDA. More importantly, the fourth quarter itself, he says the margins can be anywhere between 10 to almost 11% as well. So we'll watch out for that. Let's slip into a short break. Come back. We'll talk about another stock which is on our radar.
Stock, well, Archie's is the stock in focus. To discuss what's the outlook for FY19, we have Raghav Mulchandani, the national sales head of the company, who joins us on the phone line. Well, Raghav, just hearing that you're going to be talking to us, the street is already excited. So they're expecting positive commentary. But let's hear out the commentary that you can give us. The last time you told us that, in fact, you're going to do 160 crores for FY18. That looks quite gettable. But what about FY19? What kind of a revenue number can we work with? And more importantly, your margins from around 5-6%, they've gradually started moving higher. So for FY19, are we working with those double-digit margins?
Well, all the changes that the company has been making through, everything has been planned well. Our margins have been improving, and yes, for the next financial year, we are looking at a double-digit margin. Even on the top line revenue growth, we are targeting about 15%, and our EBITDA margins, we are targeting about 12% for the next financial year.
12%. So that's something that you haven't seen since 2008. So are you very confident of doing that, Raghav?
Well, see, that is the target, and it seems achievable looking at now how we are placed and how costs are placed, and the market is much more favorable. Our systems are much more favorable. Our inventory management systems are much better. So our lookout is very positive with the next financial year.
Raghav, my colleague Nigel was saying that 160 crores of sales was your guidance for FY18. That is pretty gettable. But what I'm a little concerned about is that earlier you said that you will turn profitable in FY18. The first 9 months you've run a loss of about 2.7 crores. Do you think the fourth quarter you can make good that loss and actually end in the black for FY18?
See, the quarter one loss that the company incurred was an extraordinary loss, and we have been working to nullify that loss. So quarter two and quarter three have been pretty good. But quarter four, yes, there is a possibility that we nullify the loss of quarter one.
Okay, all right. Raghav, you were telling us that you're cutting down in terms of outlets which are not very profitable. If you could help us out with what were the total number of outlets you had last year? Currently, what are they? And out of them, how many of them are profitable?
So last year, we had about 250 corporate stores. And currently, right now, we have about 221.
Okay.
And we have opened and closed about 25 stores. And currently, as of we speak right now, out of these 221 stores, 80% of our stores are profitable.
Okay, and all those 25 that you shut would be the non-profitable ones?
Yes.
Okay.
And the other 20%, are you planning to turn them around or shut them? What's the outlook there?
Well, see, the other 20% are the ones that are newly opened. So
Okay.
they are just going through the nascent stage and they will reach up to the maturity. So we're fine with them right now.
Raghav, when we were growing up, I think most of us would have gone to the Archie store and bought a card. But now everything is digital, everything is online. What proportion of your revenues come in through online sales? And do you have a target there as well?
So if I were to talk about greeting cards, as greeting cards in the early years were, of course, the main core category of the company. Over the years, the company has diversified into various other product segments to de-risk ourselves with the changing technology. And so the cards right now are contributing to about 18% of the overall business. But if I would just look at the total contribution of online to the whole business, it's still pretty low. It's about 3 to 4%. And that's also because one of the reasons has been that we have been growing organically within our online segment to just so that we do not end up burning a lot of cash just to maintain it more, to keep it more profitable.
Yeah.
But India is a huge market. The brick and mortars are still very relevant. People do go out. So therefore, for our e-commerce contribution to increase, there is still a long way to go. The brick and mortar is still going to stay strong and relevant, and it's going to keep on expanding.
All right, Raghav, thanks a lot for joining us and giving us all those details. An important month for you. February is when they do usually double of what they do on other months, perhaps because of that Valentine's effect. We'll keep an eye out on the fourth quarter numbers. He says there is a possibility that they can turn profitable for FY18. On that note, it's time out on Chartbusters. Stay tuned to CNBC TV18.